What's happening, everyone? In this video, I'm going to show you how I made 5K on this gold trade. As you can see on the screenshot here, there's a couple other things I want to discuss too, where I think gold is heading and basically what we have going on fundamentally with the tariff wars and stuff. But before we do all that, guys, if you want to continuously receive value from me and keep learning from me, Momentum hosts Sunday Zoom calls every Sunday. To get the Zoom link sent to you, you got to get on Momentum's email list. I'm going to leave it in the description. Feel free to do that. I will also leave our Discord link in the description. And a top comment on this video is going to win a 5K funded account at Momentum, or a 5K evaluation, I should say. All right. So let's just look at the overall state. Ignore this bullish candle because we wouldn't have this close at that time. So there's a few things that we need to consider. Daily's very bearish, or very bullish. I'm sorry. 4 hour, once again, we're bullish overall, but you can see we took a range out here. So now we have two possible scenarios. Scenario one, we go higher. Scenario two, we go lower. I am going to talk about exactly where I think price is heading and why after. So my first idea was actually to buy into this liquidity point. These are liquidities for me. So if we just break this down and we look at where gold's reacting, I really thought we were going to fill this gap. We never got it. I'm going to show you in a sec here. So we reacted off our vector POI. In my system, that's what I use for entries is vectors, because that's just how RLS works. Okay. So one of the things I didn't like about this is we never filled this gap. You can see we missed it. So this told me there's a possibility to revisit this later. However, you can also see we broke the high with vectors. So my expectation is that if price takes this out, we're going to go up and take this liquidity out. That was my initial idea. I had to adapt once I got in. So long story short here, there's two scenarios. One, price pushes down. Two, price pushes up, which case we don't know what's going to happen next. The reason this is happening right now is we have all the tariff wars in the Middle East, Ukraine, Russia, all that stuff going on. The whole market's in the air. So to get into this trade, let's see if my 15 will load. All right. So this is another one of my patterns, vectors in, vectors out. So for me, this is sometimes the creation of a move up. We don't do anything here. And you can see we got our first break here. Now I'm getting interested in what's happening, because now in my eyes, we took out this liquidity. We failed to fill the gap. We broke this high, which is my inducement high that put in these vectors. Look where we swept. We swept Asia low because price reacted off just Asia and we reacted at our reversal timings here. My expectation at this point is we're going to push higher. So I need to see confirmation because of what we have going on. I wait for another break. So we wait for a pullback. So we get our pullback, low respected, and price pushes up. So the first execution came somewhere around here. I don't remember my exact stops. I go for pips, so I'm really not too concerned on big stops. So this was the initial thought. We got some, I'm pretty sure we got some more push here, and I ended up stacking this right away. To me at this point, this is protected. I did forget to mention one thing. We did test our 200 1-hour MA, and we did test our 4-hour MA, and we have a liquidity wick and a liquidity wick. Generally, what happens when gold prints two of these is if it takes one out and we're in a liquidity market, you can turn around, target the other. It is a gold pattern I've tested over the years. So this was the initial thought. However, I'm going to show you how we adapted and had to manage here because price ended up basically taking off on me, and I think I took another one somewhere around 56 at market open. This one was, I think, the 5. I covered something decent, so I covered just below the gap on the 5 on this guy. I had to adapt to the initial idea. So in the back of my mind, because this reaction came from Asia and we didn't go any lower, I thought there could be an expectation of price basically just reacting off Asia. So I waited to see what price would do. We printed a liquidity wick. So here price had two choices. Either you keep reaching higher and you take out this liquidity wick, or you reject. If price rejects here, I close. If price keeps climbing, I'm going to watch it. And then what I would have done at that point is probably move my, I'll lock these two positions down here so profits are secure. So that's how I manage. By the way, there was no risk on these positions. I don't ever have risk. So again, liquidity wick. Now I need to watch and see if we start targeting the bottom or the top. If we go down, I close. So we get one candle, still nothing, a little bit of hope that it's going up. And ultimately, when we took this low out at 61, I ended up closing these positions. So this guy really didn't pay me. This was more of an insurance policy. If we get the push up, I get an extra 300 pips. We didn't get our push up. So when this low got broken, I basically closed all my trades out. And unfortunately, this last guy didn't make money. However, worst case scenario, price dipped into my stop and I'd still close it out and bottom two positions would cover me. So this is one trade for me. People are like, why do you take so many positions? This is all one trade. It doesn't matter if I have 3 positions or I hold for a couple of days and I put 5 or 6 positions on the leg. It's one trade idea. What I don't like doing is taking like a 5 lot at once. I'd rather take a 1 lot, watch price move, take a 1 lot, watch price move, add another 1 lot. And then if price starts moving against me, I can close everything out, cover the 1 loss, take profits. This is how I manage. So it looks like a lot of trades, but rather than me taking a 3 or 4 or 5 lot down here, I just stacked 1 lots on this, which just makes this trade easier to manage for me. This is actually how hedge funds trade. They scale in their risk. They'll never take their massive position here. They'll take a good size position, good size position, good size position. And essentially it controls the risk. As price moves in your favor, you could start removing or reducing the risk on your bottom positions. Hedge funds don't use stops so much as us, but that's how I trade. So this is kind of what price ended up doing. And to show you guys, this is what we got. So my reading of price at this liquidity was correct. Now, for those of you that watch my TikTok, I covered this and I said because price took out Asia lows, that gave me a little bit of worry that we could react off Asia high. So I was watching price here, making sure I didn't give back any profits. And sure enough, price would have taken me out and I would have got nothing on the move. So just watch where the reaction came from, because sometimes it can predict where price is going. Here, President Xi of China said something along the lines of there are no trade negotiations being made. And what do you know? We came back and filled the gap. At this point, what I see going on is we're getting a correction. And I think personally that if we see some downside movement here, I would be willing to bet that we're going to be looking at Somewhere in the 3,200 vicinity would be my first area. My second area would be here around the 30 mark. So these are my two TPs. Price kind of retraced on whatever else Trump said. I actually shorted this. I ended up closing it out. It didn't go. Looks like it was a good call to close that out. So no harm, no foul on that one. I think price will come take this out. If we stabilize this around here, I would be comfortable to short into a nice safe zone of 3250. And at which point, if fundamentals align, I do believe we will likely do something along the lines of this or that. But I do think overall the daily will stay bullish. We're way overpriced right now. These guys need to take profits because every hedge fund lost money in the first quarter. So this is all healthy profit taking. They get to take more profits. They get to buy back in. Price goes back. Unless something drastically changes in the fundamentals, that's what I see coming for the next week. But yeah, I hope you guys enjoyed this. I hope you get on Momentum's email list so you can attend Sunday's calls and learn from me. Once again, don't forget to comment. I will pick a winner for that. And yeah, I'll see you guys in the Discord, and I will see you in the next video.